Hey guys, welcome back to my stock channel. Today we're going to be doing quick, really important analysis, technical analysis specifically about Nasdaq Composite Index. Now obviously this index has been on fire for past couple of months, and I think it's reaching the limit where we might see at least some kind of little bit of sell-off. So I'm going to give you a quick technical analysis on what's going on recently and also compare it with the historical perspective and try to understand where we're at and when the sell-off could happen. So let's take a look. Before we get started, I want to give you a quick explanation why I'm using Nasdaq instead of S&P 500 to predict the crash. So if you take a look at S&P 500 for last at least couple of weeks, we haven't not doing that well. I mean, we're still not hitting new highs like we're doing for Nasdaq, and we actually had the highest point within 4 months last month, and it's still struggling, although it went up on Friday, still struggling to reach this point. If you look at Nasdaq index instead, we're making new highs and we've been moving around within this band for a while. So my point is that until we see stocks like Amazon, Microsoft, Apple go down, I don't see stock market crash happening. And since they've been so strong, that's actually not getting reflected on the S&P 500 index because the other 480 stocks have not been doing that well compared to maybe 20 high-tech stocks. So for me to really understand overall stock market picture, I do use both indexes, but I do think Nasdaq is a leading indicator and more important indicator. Alright guys, if you take a look, let's just take a look at recent trend for now. You could see when we had this big sell-off, we had sort of this uptrend band and stock were basically moving back and forth within this band. After we reached certain limit, then Nasdaq started creating new pattern and new band, which we had going up and down for past about 3 months. So if you see, we already bounced off the support 1, 2, 3, 4, 5 times. And we're at the critical point of resistance and it's actually trying to push back up. We've been on this resistance for last 5 days. In my perspective, the most important line is this line. If this line breaks, we may see some more sell-off. And here's the reason why. Now, if I go back to beginning of 2020 graph, do you see this band that we had? It was moving within this band from October to middle of February, which is about 1, 2, 3, 4.5 month period. We had this great bull trend. Once it broke through this uptrend support line, look what happened. We had great sell-off. Let's go back even more, right? Let's go back to December, in the middle of December of 2018 to May, about 5 months. Once again, we had great run and we sort of had this wedge pattern. Anyway, we had this bounce 1, 2, 3, 4 times. It didn't bounce. We had this big red candle and look what happened. Another sell off. Right, let's go back even more. 2018. Once again, we had this support, bounced it out 1, 2, 3, 4, 5, 6, 7 times and multiple times here. And we failed to bounce. And once that started to happen, look what happened. Another big sell-off. So this trend has been continuing for past at least a couple of years. So if I zoom out, right, I know it's hard to see the candlesticks and the lines, but uptrend support, boom, broke, big sell-off. Uptrend support, boom, somewhat of a big sell-off. Uptrend support broken, big sell-off. So let's take a look at where we're at right now. We're at the top of resistance line. So we still have room to go in terms of sell-off needed for it to go down here. However, the stocks are severely overpriced right now. And it only takes, a couple of days for things to sell off and move into this territory. Let's take a look at the last case scenario that we had on 2020, right? So you see it was at top of resistance line for 1, 2, 3, 4, 5, 6 days. And we had that red candle. And once we started having this bigger red candle, and after that a gap down candle, look what happened. We really started selling off. So I'm not giving you any reason to sell right now, but because it's still at the top of resistance line, but we're at a point that we should be really careful. Right now, Apple P is at 30, right? Apple P was at about 26, 27 here, and we had this big sell-off. If you tell me their growth is somewhat decent, but Apple was trading at 10 to 20 PE historically, even when they had solid growth. Right now it's at 30, and Nasdaq is way too overextended. Does that mean it could go up a little more? It can go up a little more. However, you still have to be a little bit careful in terms of selling out your positions when they're really, really expensive. You always have to buy low and sell high. And we're definitely at the high point. I'm not saying we're at the ceiling, at the highest point, but we're definitely at the high point. So last thing is, starting from this week, we have earnings that's coming up. Now, Wall Street is expecting extreme high expectations on earnings right now. They're expecting to beat this quarter. More importantly, they think guidance will be really, really good moving on forward. That's why stock price have gone this high. If the guidance doesn't meet the criteria of this current evaluation, the stock market will go down. I guarantee it. It's a matter of how much it's going to go down, but it will go down. However, if earnings exceed expectations and also guidance exceeds expectation, then we may see some more back and forth within this band for a little more, but not much more in my perspective, because stock prices are still high. That's just my opinion. And that's it for today's analysis. Thank you so much for watching, and be sure to subscribe and hit the bell button for more videos like this. Thank you.